Both stocks and bonds will likely benefit if the June CPI in the U.S. continues to slow. The June CPI figure could even touch a 27-month low of plus 3.1% year-on-year. The CPI for May was plus 4.0%. Looking at the June CPI ex-food and energy, expectations are 5.0%, down from 5.3% in May. Stock indexes closed moderately higher on Tuesday. The S&P 500 index, SPY ETF, closed up plus 0.67%, and the NASDAQ 100 index QQQ ETF closed up plus 0.49%. Events outside U.S. stocks also benefited the market. Chinese authorities have increased relief measures for property developers. Also, a Fed president stated that he does not see a recession. There is the continued expectation of around 90% rise in interest rates by 25 bits per second at the upcoming FOMC meeting. Markets expect a peak Fed funds rate of 5.4% by year-end. The current effective Fed funds rate is 5.07%. So far in 2023, the NASDAQ 100, NDX, has gained roughly 40% YTD, compared to the S&P 500's plus 15%. The Magnificent Seven and their stellar performance in 2023 has driven the bull market. The performance from the large-cap tech stocks have been stellar. Think of this: Nvidia, NVDA, plus 195%, Tesla, TSLA, plus 149%, Meta, plus 136%, Apple, AAPL, plus 51%, Amazon, AMZN, plus 48%, Microsoft, MSFT, plus 39%, Alphabet, Google, plus 31%. It has been quite a rebound or recovery or growth story, depending on your market perspective. To put things in perspective, if not for these enormous gains, the S&P 500 would be slightly down on the year. The NASDAQ 100 is certainly overconcentrated with these stocks. What is next for the markets? There are signs of a broader market, and previously forgotten gathering pace. The earnings season starts Friday, and the banks will lead off. Reporting first will be the major U.S. banks, and it could be a bit of a "show me the money" situation. The first half of 2023 has been difficult, highlighted with the collapse of a number of banks. The two notable ones were First Republic and Silicon Valley Bank. The major banks which will be reporting are JP Morgan, JPM, Wells Fargo, WFC, and Citigroup. Keenly watched will be the data on loan and deposit growth. At the likely expense of the regional banks, loans and deposits are expected to have a sound level of growth. Of the major banks, the two considered to be undervalued banks are Bank of America, BAC, and Citigroup, C. Consol Energy Inc., CEIX. CEIX is a manufacturer and exporter of bituminous thermal coal and crossover metallurgical coal. It owns and operates profitable longwall mining operations in the northern Appalachian Basin. CEIX is headquartered in Pennsylvania. The chart depicts the new buy signal on July 11, 2023 at an entry price of $67.89. This is based on the crossover of the 50 to 200-day MACD oscillator. When the shorter-term moving average closes above the longer-term moving average, it suggests the beginning of an upward trend. Over the past 5 years, a buy signal on 50 to 200-day MACD oscillator for CEIX has resulted in a gain of plus 648.72%. This compared to a 5-year market gain on the stock of plus 77.03%. The signal gain is based on only 2 trades, so not a lot of data. The average duration was 431 days per trade. Global bond yields are volatile. The 10-year Treasury note yield is currently at 3.986% and 10-year German Bund yield is 2.649%. The 10-year UK gilt yield increased by 2.3 basis points to 4.66%. Overseas stock markets Tuesday settled higher. The Euro Stoxx 50 closed up plus 0.71%. The Shanghai Composite Index closed up plus 0.55%. While Japan's Nikkei stock index was flat. All the graphs in this video are by BARCHART. If you are thinking of subscribing to BARCHART, my affiliate link is in the comments. Also included are my affiliate links to the online brokers, eToro, First Trade, and FX Primus. These videos give a quick overview of the U.S. stock markets with a couple of stock ideas. Issued on Mondays, Wednesdays and Fridays based on the underlying blog. Visit my blog site www.smartestdata.blog. If you like these videos, hit like and subscribe, it really does help the channel. See you in the next video.